Illustration number 2, Suraj Mart furnishes the following information. So here transactions during the month of April 2005 are as under. So let us see the following transactions, how we have to post in the journal account. So let us start with the transaction 1. 1/4/2005 business started with cash rupees 1,50,000. So here we have a first transaction on 1/4/2005 where the business is started with a cash of rupees 1,50,000. So here you can understand the transaction where cash is entering into the business and it is towards the capital of the business. So here the entry will be in a journal table. So the pattern was discussed in the previous sessions where we have date, particulars, ledger folio, debit and credit. So now the first entry will be recorded as 1/4/2005 cash account debtor to capital account. So here amount will be debited 1,50,000, again for the credit entry 1,50,000. So narration will be started business with cash 1,50,000. Now let us come to the second transaction, which is on 1/4/2005 goods purchased from Manisha rupees 36,000. So here when coming to the goods purchased from Manisha, it is on 36,000. So here you can remember one point, whenever it is in the on the cash you will be given cash, but whenever it is purchased on the credit basis the creditor's name will be given. At that time instead of cash we have to record the creditor's name. So here the entry will be in date column 1/4/2005. Again the entry will be purchases account debtor to Monisha account. So why we are going to take Monisha here is because the amount should be paid on the later date. The amount will be 36,000 in the debit column, again 36,000 in the credit column. The narration will be goods purchased on credit from Manisha. So let us come for the third transaction here. 1/4/2005 stationery purchased for cash rupees 22,200. So here the stationery was purchased. Okay, so we are going to follow the real account rule here. Debit what comes in, credit what goes out. So entry will be like this: 1/4/2005 stationery account debtor to cash account. So stationery is coming inside and cash is going outside. So stationery account debtor to cash account, amount will be 2,200 debit, 2,200 credit. So narration will be stationery purchased for cash. So let us come for the fourth transaction. The next transaction is on 2/4/2005 open a bank account with SBI for rupees 35,000. So you can understand the transaction here where the cash is deposited into a bank. So to open a bank account, what we are doing here, 35,000 were deposited into the bank where cash is going outside the organization, another side it is deposited into the bank account of the organization itself. So here the entry will be the date 2/4/2005 bank account debtor to cash account. In bracket the narration will be open a bank account with cash of rupees 35,000. So let us come, amount will be in the debit column 35,000 and credit column 35,000. So let us come for the next transaction, which is on 2/4/2005, which is open a bank account with SBI for rupees 35,000. So where the bank account is opened with a cash of rupees 35,000, you can concentrate here. When coming to this transaction, the cash is going outside the organization and it is deposited into the bank. So the entry will be here 2/4/2005 bank account debtor to cash account. Amount column, when coming to the debit 35,000, again in the credit amount 35,000. So the narration will be opened a bank account with cash rupees 35,000 with State Bank of India. So again when coming to the next transaction, we have on 2/4/2005 goods sold to Priya for rupees 16,000. So here Again the name was mentioned here, Priya. So when the name is mentioned, it is understandable that the goods were sold on credit. Again, when coming to the next transaction, we have on 3/4/2005 received a check of rupees 16,000 from Priya. So we are receiving a check from Priya which is of 16,000. So here the entry will be 3/4/2005 bank account debtor to Priya account. So the narration will be received a check from Priya. Again coming to the next transaction, we have on 5/4/2005. So the entry is sold goods to Nandini rupees 14,000. Again instead of cash, the goods were sold on credit because the debtor's name is given here. So the narration will be 5/4/2005 Nandini account debtor to sales account. So instead of cash, we are going to take Nandini because the amount will be paid on the later date. 14,000 debit and 14,000 credit. Again the narration will be goods sold to Nandini on credit. So let us see the next transaction which we have on 8/4/2005. So where Nandini pays 14,000 cash. So when coming to this transaction, Nandini is paying 14,000. So here personal account takes place where debit the receiver, credit the giver. So giver is Nandini here, receiver is the organization. So here the transaction will be 8/4/2005 cash account debtor to Nandini account. So debit column will be 14,000, again in the credit column 14,000. So the narration will be Nandini pays cash to the organization. So this will be the narration here. Again let us see the next transaction. It is on 10/4/2005. So the transaction is purchased goods for rupees 20,000 on credit from Ritu. So what happens here, again the purchase is on credit basis. So instead of cash, we have to credit Ritu here. So the entry will be 10/4/2005 purchases account debtor to Ritu account. So debit column 20,000, credit 20,000. The narration will be purchased goods on credit from Ritu. So let us see the next transaction which is on 14/4/2005. So here the transaction is insurance paid by check rupees 6,000. So here when coming to the insurance, it is an expense. Okay, let me repeat once again. When coming to the insurance, it is a expense which is paid by the organization. So here we are going to follow the nominal rule. So nominal rule here is debit all expenses and losses, credit all incomes and gains. So insurance is a expense that should be debited here. So let us see the transaction for this. The first is the date will be on 14/4/2005. The entry will be insurance premium account debtor to bank account. So here the insurance premium is an expenses which is paid by the organization and it is paid by check since we are going to credit bank account. So the transaction is insurance premium account debtor to bank account. In debit column 6,000, again in the credit column 6,000. So the narration will be insurance premium paid through check. Let us see the next transaction which is on 18/4/2005. The transaction is paid rent rupees 2,000. So the organization is paying rent here. Again it is an expenses which will be falling in the nominal category where the rule is debit all expenses and losses, credit all incomes and gains. So now when coming to the journal entry here, it will be on 18/4/2005 rent account debtor to cash account. So here the rent is paid. Again it is not mentioned here whether it is by bank or whether it is by cash. So we are considering it in a cash. So rent account debtor to cash account, debit 2,000, again credit 2,000. So the narration will be in bracket rent paid. So the rent is paid here. Let us come to the next transaction which is on 20th/4/2005. The entry is goods costing rupees 1500 given as charity. See here, when coming to the charity, whatever goods we are going to give in the charity, that particular goods will be taken from the purchasers, not from the sales. So what is the difference here? When coming to the purchasers, the profit will not be added to that, but when coming to the sales, it will be includable of profit. The profit is included, the income is included on the sales, but when coming to the purchasers, we are not going to include the profits in that. So that whatever goods we are going to give on the charity, it is free of cost since it is taken from the purchasers. So for this, the entry will be 24/2005 charity account debtor to purchasers account, 1500 debit and 1500 credit. In the narration, goods given on charity. So let us come for the next transaction here, which is on 24/4/2005. The entry is purchased office furniture for rupees 11,200. So again here we are going to follow the real account rule, where the furniture is a commodity, debit what comes in, credit what goes out. So the entry will be 24/4/2005 furniture account debtor to cash account. So here the furniture was purchased for rupees 11,200. For that, the cash is paid 11,200. So here furniture account debtor to cash account, 11,200 debit, again 11,200 credit. So coming to the next transaction, which is on 29/4/2005. So the entry is cash withdrawn for household purpose rupees 5,000. So here the cash is withdrawn from the business for the household purpose. So here the entry will be date 29/4/2005 drawings account debtor to cash account. So the narration will be cash withdrawn from business. Debit column 5,000 debit, again coming to the credit, again 5,000 credit. So let us come for the next transaction, which is on 30th/4/2005. The entry is interest received in cash rupees 1,200. So let me repeat once again here, interest received in cash. So what they are saying here, they are going to receive the interest. So when coming to the business, when they are receiving interest, it will be a income here. So as I said, when coming to the income and expenses, we are going to follow the nominal rule, where debit all expenses and losses, credit all incomes and gains. Since interest is a income here, it should be credited. So let us see transaction or the journal entry for this, which will be on 30th/4/2005 cash account debtor to interest account. So we are going to receive the interest here since it is credited here. So cash account debtor to interest account, amount 1,200 debit, 1,200 credit. So the narration will be interest received in cash. Let us see the next transaction, which is on 30th/4/2005 again cash sales rupees 2,300. So now here the sales is made on cash. So when it is made on the cash, we are going to take transaction as cash itself. When it is on the credit, we are going to take the debtor's name. So here the transaction will be on the same date, 30th/4/2005 cash account debtor to sales account. Since we are receiving a cash, it will be debited to sales account. So the amount here 2,300 debit and 2,300 credit. So let us come for the next transaction, which is again on the same date, 30th/4/2005 commission paid rupees 3,000 by check. So here commission is an expenses. Okay, so what we have to see here is whether it is paid by cash or whether it is paid by bank. If it is paid by cash, we are going to consider cash account. If it is paid by check, we are going to consider bank account. So commission is an expenses here. The nominal rule again is debit all expenses and losses. So commission is paid, it is an expenses that should be debited. So let us see in the journal account here, the entry will be on the same date 30th/4/2005, commission account debtor to bank account 3000 debit and 3000 credit. So then coming to the narration, commission paid by check. Let us see the next transaction which we have on 30th/4/2005, telephone bill paid by check rupees 2000. Again it is an expenses. Again the same entry we are going to record on the same date 30th/4/2005, telephone expenses account debtor to bank account 2000 debit 2000 credit. So the narration, telephone expenses paid by check. So let us see the next transaction which we have on 30th/4/2005, payment of salaries in cash rupees 12,000. So now the salaries are also an expenses, but it is paid in cash. So instead of bank, you are going to take cash here. So let us see in the account here, 30th/4/2005, salaries account debtor to cash account 12,000 debit 12,000 credit. So the narration, salaries paid in cash.